So what's your outlook on bank interest rates now? If for any reason the MPC decides to shift its stance on those rates?
Well, you have to look at the economy. Right now, inflation is 9.3, and it's trending upwards. And that's the important thing. It's not the inflation rate, but where is it moving to? Is it moving down or up? There's so much pressure because of the virtual devaluation of the dollar to move inflation up. So if inflation is 9.3, trending to 10, double digits, how do you want to reduce interest rates? Because between 13, the MPC, and 10, the virtual inflation rate we are looking at in the near future, is only 3% to give a real return on any person who wants to deposit money in the money market. So how do you seriously reduce interest rates if you don't address inflation? And how do you address inflation if the dollar keeps rising and there's no way you're going to reduce the dollar rate at this point?
So definitely we should expect to see interest rates remain the way they are at the banks of between 25 to 28% in some cases.
Yeah, because in fact, the banks will struggle to keep those rates, because what enabled them to have those rates was they had a lot of public sector deposits to help them, to cushion them. So as you remove the public sector deposits, the cost of funds when they go to the private sector is going higher. Private sector fund owners are going to ask for higher interest rates. So they're going to be pushing the banks to give them 11%, 11.5, 12%, almost pushing them to the MPC rate of 13%. And when you don't have any deposits from federal governments, you are forced to take money from whoever else has money as a banker and give whatever rates will encourage them to give you money. So if you have lots of money now, you actually call the shots as far as deposit rates are for the banks.
And this is going to cause more than a few palpitations for people who are watching the economy for the fourth quarter of the year. For instance, we saw GDP slow down in the second quarter of the year to about 2.35%, and you're now expecting that if for any reason the monetary policy authorities takes the decision that it takes, there should be a spurring of growth in the next quarter. Do you feel that is likely to happen? What is your outlook for the fourth quarter of the year?
Well, the only thing, that's why it's almost certain that they will have to reduce the CRR. That's the only way you can stimulate some growth, by freeing up some of the private sector deposits for the banks to lend for new projects, because you don't really grow from maintaining existing projects. You have to do new lending. There are a lot of projects that have been waiting since third quarter of last year. Before the elections, a lot of projects were put on hold because we didn't know where the whole political economy was going. Now, hoping that ministers come in next month, a lot of projects are planning to come back on track, and they are going to need funding. So if you don't reduce the CRR, I don't see how the GDP is going to move anywhere, if not downwards, in the fourth quarter.
But then, there are key sectors of the economy that actually need to have a reflation, spur growth, kickstart something. The manufacturing sector, for instance, the rail sector, for instance, these are sectors that are practically stagnant, especially since the Central Bank of Nigeria came out with its policy banning some items from accessing forex. So how do you expect these sectors to perform? Already manufacturing is not even up to par at all with regard to its contribution to GDP.
Well, that's why the CBN is talking a lot about intervention funds, because clearly, as if you look at the economy, the scope for reducing interest rates to stimulate growth through increased lending is very, very limited. So the CBN is looking at significant intervention funds in various sectors. And where you are going to find growth from is if the CBN intervention funds are supported by other development finance institutions, bringing in massive development finance. We need to open that space significantly. The likes of the BOI, AFC, the Bank of Industry, they need to go out there. The bond market is very attractive now. They need to go and raise very, very large bonds in order to stimulate the economy. The CBN is very close to the wall, if you like, in all the options they have, because they don't have control anymore over what's happening to the oil market. And so Nigeria, no matter what we produce 3 million barrels a day, you are still going to sell at 40, 45, $50, $49 per barrel. So you are not going to make a lot of money from there. And you are not going to be able to increase taxes significantly in the next 3 months to make any real difference in terms of government revenues. So it is development finance capacity that perhaps we need to be looking at.
Okay, so we'll keep our fingers crossed and hope that when the MPC's decision is announced at 2 o'clock, it will favor the economy. But thank you so much, Mr. Idahosa, for coming on the program.
Thank you.